Let's get started. I want to introduce our panelists. First, I'm thrilled to have with us Sofia Muñoz. Sofia is the AVP Business Development Officer for the State of New York Mortgage Agency, known as SONYMA. Sofia, please tell everyone a little bit about you.
Hello, good evening, everyone, and thank you so much for Emigrant Bank for actually hosting this and for Schnapp. So I'm Sofia Muñoz. I am the Business Development Officer. I've been doing this about 35 years in the mortgage industry. I probably started when I was about 2, but I've been with SONYMA close to 9 years now, State of New York Mortgage Agency. And first and foremost, I want to say thank you so much for everyone who is joining us tonight. I know that it's a beautiful summer night, and it's, you could be doing a whole host of things in this beautiful night, but the fact that you're taking the time to join us, to get educated, to find out what programs are available shows your tenacity in being able to hopefully achieve the dream of homeownership. So I applaud you all for being here, and thank you so much.
Thank you so much. Now, please welcome Veronica Ferrero. She is the VP Community Lending Officer at Emigrant Mortgage Division of Emigrant Bank. Veronica, please share a little bit about yourself.
Good afternoon and good evening, everybody. And thank you for coming at this beautiful webinar on this beautiful day. Thank you, Sofia. Sofia and I were in kindergarten together, 35 years ago, and we decided to be in the mortgage business. So we're delighted. And thank you again, Sofia, for being here. It's such a privilege to have you. I am the Vice President of Community Lending. My job is to go out into the community and teach the community about various topics. We do it about budgeting, we do about credit, we do financial education, identity theft, and we love to do every step of the way where we teach you how to prepare for the home ownership. And it doesn't matter if you're ready now or in a few months from now, or in a year from now. Our job is to prepare you for that big trip, for that big step in your life. So I'm honored to be here. Again, we are both bilingual, so we are here to help you if you have any questions. And I'm delighted to be at this webinar, and please enjoy. Thank you.
Thank you so much, Veronica. We are very lucky to have both of you. So I'm going to go ahead and share our first presentation. Sofia, please.
Thank you so much. So again, we are State of New York Mortgage Agency, or better known as SONYMA, and I am Sofia Muñoz, and thank you again. Next, please. So if you're looking to buy your first home, hopefully you'll think about SONYMA as one of the programs. So SONYMA provides down payment assistance, below market interest rates, home renovation financing. We have special veterans program, and if anyone's a veteran, first and foremost, let me say thank you for your service. We do have a veterans program. Unlike the VA program, where it's strictly for the veteran and their spouse, our veterans program is for the veteran and their family members. So the veteran doesn't even have to be on the mortgage, or be on the application, as long as they're going to occupy the property and they are going to be on title, your family member gets the same benefit. All of our programs are available for 1 to 4 family homes, including co-ops and condos. Next, please. So again, who are we and why are we here? We were created around 1970, and our mission is really to provide safe, affordable, and sustainable home ownership opportunities for low to moderate income households in New York State, primarily to first-time homebuyers. It could be anywhere in the state, anywhere from the tip of Staten Island all the way to Buffalo. And our definition of a first-time homebuyer is someone who has not owned a primary home in the last 3 years. So maybe you owned something previously, but you haven't owned something in the last 3 years. For SONYMA purposes, you are still a first-time homebuyer. And all of our programs are available through a network of participating lenders, such as Emigrant Bank, Emigrant Mortgage, and a list of our lenders and the areas that they serve can be found on our website, which is sonyma.org. Next. So again, why SONYMA? Because we provide various mortgage programs, primarily, as I mentioned, targeted for first-time homebuyers anywhere in New York. Next, please. So our programs are the following. We do have our low interest rate program. Our two main programs are really our low interest rate program, which I always like to say was named incorrectly because it's not really our lowest interest rate. We have Achieving the Dream program, and that is our lowest interest rate. As I mentioned before, we have Homes for Veterans. We have a new program that we rolled out recently. I'll tell you a little bit about it as we go along, which is Credit is Due. We have a renovation program, which is called the Remodel New York program. Right now, we have another one called Neighborhood Revitalization program, but we will be phasing that program out. And we have a Graduate to Homeownership program, which really is primarily for recent graduates in the upstate communities. Next, please. So all of our programs have income limits and purchase price limits. So in our Achieving the Dream program, if you're looking to buy in the 5 boroughs or Rockland County, and so we always go by whether it's 1 or 2 person household or 3 or more person households, and whatever the dynamic of that household may be. 1 or 2 person household can be a single mom and a child, or a 3 person household can be single mom and 2 children. If it's a 1 or 2 person household, and again, you're looking to purchase within the 5 boroughs or Rockland County, then our income limit is $135,550 under the Achieving the Dream program. If you're looking to purchase in Long Island, if you're looking to purchase, again, 5 boroughs and it's a family and it's a household of 3 or more, then the income limit is $158,140. If you're looking to purchase in Long Island, again, higher cost areas or higher taxes, so the income limits are a little higher. 1 or 2 person household, $147,740, and 3 or more person household, $172,360. You're looking to purchase in Westchester, 1 or 2 person household is $140,920, and 3 family households is $164,410. Now, our low interest rate program has a higher income limits, right? So again, if you're looking to stay within the 5 boroughs and you're looking at the low interest rate program, then the income limit is $169,440 for 2 family size of 2 or household size of 2, and 3 or more person, $197,680. Long Island, as I mentioned, has higher income limits, and Westchester as well. And I do see something in the chat that says it doesn't talk about apartments. So if you're looking at, so for us, a 1-family home, which is our purchase price limit, that includes condos and co-ops. So that's the purchase price limit would be $1,110,400, and I apologize for the puppies in the background. And if you're looking at a 2-family home, then the income limit would be, the purchase price limit for that would be $1,421,800. 3-family unit would be $1,718,510, and 4-family unit would be $2,135,790. So remember that whenever we talk about 1 family, we're also including co-ops and condos in that equation. And that's the purchase price limits for all 5 boroughs as well as Long Island. Next, please. So some of the benefits of SONYMA is that SONYMA programs have overall lower overall costs and payments compared to other traditional first-time homebuyer programs, including FHA. So SONYMA is state, FHA is federal. It's not. It's also a good program, but you will have higher costs with an FHA program as opposed to SONYMA. For instance, with an FHA program, and that's something that, again, Veronica can talk to you about. She is the mortgage expert. The FHA program has, for the life of the loan, you pretty much will have private mortgage insurance. With SONYMA, will go away after you reach the 80% mark. With FHA, you also have an upfront mortgage insurance fee, which is like almost it's like 1 3/4% of the loan amount. So it will be a more costly loan. We also have flexible credit options, less restrictive guidelines, and opportunities, especially through our Credit is Due program. Next, please. So Credit is Due is a program that was rolled out a few months ago. I would say it's almost a year now. It's a new program for historically underserved communities, households of color. Just like with all of our programs, SONYMA does not have a minimum FICO score, right? However, with that being said, with all of our programs, we do want to see that you have at least 3 trade lines, whether it be what they consider traditional, and traditional would be what's on your credit report, or non-traditional, which would be you pay your utilities on time and you can show proof of that. You pay your cell phone on time, you pay auto insurance on time. So you can show us that, again, instead of what they call traditional credit. This program allows, the Credit is Due program allows for, maybe you have no credit at all, but you can show us that you've paid your rent on time for the last 12 months, then you would possibly be able to continue with the Credit is Due program. This program, the Credit is Due program, also offers up to $30,000 to be used that you can use in assistance for a down payment or closing costs or a combination of both. Like our regular down payment program, it is forgiven after 10 years. If you own the property for 10 years, it's forgiven, it's a gift, and you never have to repay it. If you sell before 10 years, there may be something that you have to return. So for instance, every time that you make a mortgage payment, a certain percentage of it is forgiven. So it's never going to be the same amount that we gave you as opposed to what you would have to pay back if you sell before 10 years. So I can give you an example of we gave someone $12,500. They sold in 3 years and they made a profit because it's always based on whether you make a profit or not. And they paid back $2,500. So we gave them $12,500. They sold in 3 years. They made a profit. They paid back $2,500. So there's a whole calculation that goes into it. And this program, the Credit is Due program, says, okay, we'll give you the assistance of up to $30,000. We have less restrictive credit guidelines. And if all of that, still with all of that, you still don't qualify, then this particular program can give up to a 2% off on the prevailing rate, right? So if today our rate is 6.25, and there with 30,000 and everything else, you still don't qualify, we start to reduce that rate to the point that we get you to be able to qualify, with, again, the max being 2% off on the rate. As I mentioned, it does have alternative underwriting guidelines for applicants who have had credit challenges in the past or just really have no credit at this time, right? We want to be able to remove that barrier that stands between you and homeownership, and especially, as I mentioned, in underserved markets and in households of color, and we want everyone to be able to start to build wealth through homeownership. Next. So some of the additional benefits of SONYMA is that you can benefit from our down payment assistance, which again is less money out of your own pocket. SONYMA offers our regular down payment assistance program offers 3% of the purchase price, up to $15,000 that you could use for down payment or closing costs, right? Combination of both. So let's say that you want to use $7,500 for down payment and $7,500 for closing costs. You can do that. We also have a program that right now is closed, but it should be opening up within the next month or two. It's called our DPOW Plus program, and that program is up to also $30,000 for down payment. That does have limited funding. So last round was $5 million towards that program. We don't know what this round will be, but again, those are available again for low to moderate income earners. Next. I also failed to mention that you can use our down payment assistance, all right? Most programs, if you're putting down less than 20%, you're going to have private mortgage insurance. And that's something that, again, normally stays with you. When you purchase, if you're only putting 3% down, you're at a 97% loan to value, right? So the PMI will stay with you until you reach 80% loan to value. But you can utilize our down payment assistance to be able to pay that one time and eliminate it and not have that as an additional monthly expense on your mortgage. If you're looking to purchase a home that's in need of repair, right now we are offering our neighborhood revitalization program, which offers up to $20,000 to be able to fix up that home. That has income restrictions. You can only fall within the Achieving the Dream income limits that I spoke about earlier. But we do have our Remodel New York program, which can be used. Again, that program is, it really doesn't have a max as to how much you can use. Think about HGTV, and when you see the home and putting it, homes that really need repairs, and you're making it into your dream home. And as long as you qualify, because that's being put into the mortgage, you're able to have the additional funding to be able to fix up that home. So don't, looking for homes, especially now where so many of them are priced so high, don't discount the home that maybe needs some repairs, because at least you have an opportunity to be able to have renovation financing as well. Next. So all of our programs are designed to work well with available grants and assistance that may be available to you as a first-time home buyer or in your community. Next, please. And as I mentioned before, with SONYMA, home buyers need less of their own money. SONYMA understands that many of you, right, many folks, especially in the 5 boroughs, are paying basically a mortgage just in rent. And with the rent that you're paying, again, how is it possible to also be able to save for a down payment? It's virtually impossible. So that's the reason why a lot of these grant programs exist. We allow what we call the layering of grants. So if there are any other grants or assistance that may be available to you, you can layer that with our down payment assistance as well. So again, first-time home buyers need less of their own funds when using SONYMA financing. So if you're purchasing a one-family, which includes, again, co-ops and condos, one family or a condo, right, or a 2-family, then you only need 1% of your own funds. If you're purchasing a co-op, a 3-family, or a 4-family, then we require that you have at least 3% of your own funds. So just to put that in numbers, right, if you're looking at a $400,000 home and it's a 1-family or a 2-family or condo, you only need to have $4,000 of your own funds into the transaction, right? The rest can come from down payment assistance or a gift. If you're fortunate enough to have family members that are willing to give you a gift for your down payment, if you're able to get a gift, again, all we really need is a gift letter and to show that the person giving you the gift has that ability to give it to you. But we allow the layering of grants and assistance, as well as you being able to obtain a gift from a family member for down payment. Next. So all of our programs do require homebuyer education, and homebuyer education is available in your area. Nonprofits, and on our website there is a list of nonprofits. The nonprofit agencies offer homebuyer education, and they are also the experts in locating down payment assistance and grants that you may qualify for. I've known Veronica for many years, and Veronica's really good about knowing what's available, what grants are available, and being able to assist you with that as well. But the nonprofit agencies, when you go to them, they're able to tell you what's available. They're able to when they run your credit, it's strictly for counseling purposes, so it does not affect your score at all, which is so important. But again, Veronica will explain that, especially on the bank's end. Next, please. So how do you get started, right? We usually say, attend a homeownership counseling, because again, those are the experts that can tell you or give you the guidance from beginning to end. And of course, speak with a loan officer, speak with, someone like Veronica, who can pre-approve you and can also educate you on what programs are available, qualify you and let you know, we all want to achieve that dream of homeownership. but we want it to be able to be safe and sustainable, right? We don't want to have to lose that home. So you don't want to fall in love with something that you really can't afford. So being able to get pre-approved really lets you know what you can, what is your buying power? What can you go out there and look for? And again, with programs that give you assistance, now you have more money, and the more money for down payment you have, the more affordability you have, or the greater affordability you have. Next, please. So we do have you can scan our QR code. We also have a 800 number that you can reach out to SONYMA for, and it's here. Next slide, please. And this is my information. This is my cell phone number. Again, I cover the 5 boroughs as well as Long Island. I have a colleague, Bill Teague, who covers all of Westchester and the upstate communities. My wish for you is that you all know that amazing feeling of being able to get the keys to your home. It's one of the best feelings in the world. But as I mentioned before, it is about doing it in a safe, affordable, and sustainable manner. And I don't want anyone to be discouraged if you can't do this today, tomorrow, 6 months from now. The important thing is that you're educating yourself of what's available and what steps need to be taken, and putting yourself in the position that when you do take the step, if homeownership is your dream and that's where you want to go, that you're able to do it, and be able to afford that monthly payment. So thank you so much for your attention. I am here if you have any questions. Thanks again. Thank you for doing the slides.
Thank you so much. That was so, whenever I hear this, I cannot believe all the incredible things that are available, and really wonderful to be able to share that with everyone. So I thank you on behalf of everyone watching. Veronica, are you ready to talk a little bit more? I would love for Veronica to share with you, because really it's so critical for you to have a lender who knows, who can be your partner in this, because it's really a big part of it is speaking with the right lending officer. So please, Veronica.
Thank you so much. Thank you, Elizabeth and Schneps. It's always a pleasure to partner up with you guys. And thank you so much, Sophia. This woman knows SONYMA inside out. And it is really an honor for me to be together with her tonight, because she knows SONYMA better than anybody else. So again, thank you. So basically the next, this is my information, and again, it's going to be shared. So my name is Veronica Ferrero, and my email address is ferrerov@emigrant. I'm sure that you're going to have some questions. We will try and get all the questions today, but if we can't get them, by all means, reach out to us. Some of the questions are a little bit specific to your situation, so definitely reach out to us, either later on or tomorrow, and we'll be there for you. So the next slide, please. So we're going to talk a little bit about the pre-approval process. And if I talk a little bit fast, it's because I have so much information to give you. So decide to get the pre-approval. So important. But before you start that pre-approval process, you may want to talk to a loan officer and basically explain the situation. Maybe your credit needs to be fixed. Maybe you need to save a little bit more money. Maybe you have a lease and you can't break that lease. So that pre-approval process, sometimes you got to put that on the back burner, because you want to make sure that you're ready for that pre-approval process. And who's going to be in the pre-approval? Maybe one of your partner needs to fix their credit. So those are the questions that you need to discuss with your loan officer in detail. So how to avoid those pitfalls? The pre-approval is basically based on the area that you want to buy, how much you want to spend of your own money. Are you comfortable with the payment? But again, that pre-approval, there's moving targets, and the moving targets is depending on the type of property that you want to buy. Let's say that you want to buy a co-op. Some co-ops, the HOA is a little bit higher than others. Some co-ops require 20%, and then maybe this is not the co-op for you. Not all co-ops require 20%. So don't be discouraged about that. Maybe you want to buy this co-op, but the maintenance are going to be going up, and you want to make sure that this co-op qualifies for the grants with SONYMA or whoever you're going to go with. And again, interest rate, that is again another moving target. So I could pre-approve you at one interest rate, but 2 months down the road, the rates may have changed. So that communication with your loan officer is so important. So if you've been pre-approved, you want to make sure that you've given them the information of what the type of property and the area that you're looking to buy, because again, like Delphia explained, some areas have specific income limits and specific purchase price. So we would like to know more. Are you buying in Westchester? Are you buying in Long Island? So those are the questions that I would be asking from you. And don't be discouraged if this being pre-approved and you've been declined. You want to find out, why were you declined? And again, the pre-approval, I can't stress this enough. If you are going for grants, you need to talk to a lender that provides these grants, because remember, we are going to basically give those grants on the behalf of SONYMA. So we are going to give that information to SONYMA to see if you are approved. You cannot go to SONYMA directly. So again, you need to find a lender that is going to pre-approve you based on the guidelines of these grants, because some grants are very different. Some have specific income ratios and some have specific income depending on how many people are going to be living in the property. So always ask those questions. So next slide, please. So these are some of the 10 steps that you want to make sure that your credit report, if there's something that you need to fix on your credit, do it now before the pre-approval. Figure out how much you can afford. Is that number okay with you? Because sometimes I pre-approve people that, okay, your monthly payment is going to be $4,000. And say, Veronica, that's way too much. I don't want to be a slave to that mortgage payment. Find a good real estate agent. Again, the team, you need to have that team people behind you. Get pre-approved by a lender that is going to offer you grants. Not every lender offers grants. Start looking at homes. You want to keep that in mind. You want to make sure that that home offers everything that you need in respect of the most important thing. So is the most important that you want to be close to, the train, or you want to be public, transportation, or you want to be close to a church, or, those are the most important. Always look for 5 very important things. So then it's going to be a much easier, trip to find that home that you're looking for. Then you make an offer, home inspection. Please remember that there's a difference in between home inspection and appraisal. The home inspection is for you, and the appraisal is the bank what it's going to do. So 2 different things. Get insurance. Also make sure that you know what the insurance is going to be, the monthly payments, and what utilities are going to be paying. So if you're buying a house, your utilities are going to be a little bit higher than if you're buying a co-op. Next slide, please. So get ready. That means that you want to be ready to buy. And sometimes, again, that timing is not ready. So you want to make sure that that person that is going to walk you through, that loan officer, is going to be ready for you during that whole trip. It's so important that you can have communication. I've heard a lot of people that have talked to lenders, they say, oh, call me when you're ready. That's not the answer you want to. You want to have that person by your side all during this trip, not when you're ready to buy or when you're in contract. Figure out how your financing options. Make sure that you know exactly what type of mortgage you're going to, what is the interest rate, what has happened to the interest rate. And so have that in mind, because you want to have a clear indication of what your mortgage payments are going to be. That means what my principal is going to be, my interest, what are the real estate taxes, if that is applicable, what is my HOA, if it's a co-op, what is my mortgage insurance going to be? Again, mortgage insurance is very important, and it's based on your credit score. So you want to get your credit score high so your mortgage insurance is not going to be that expensive on a monthly basis. Your next slide, please. The next slide, please.
Oh, this number 3, step 3, you got that already?
Yeah, we got that. So this is very important. These are the 4 C's of credit. Capacity. What does that mean? What is going to be, has your income changed? Is your income going to be, are you going to be getting a bonus? Are you going to be getting a raise? Have you had the same job for 2 years? Is it a part-time? Everything about your income we need to know about, because we need to make sure that you have that consistent income in order to qualify you. Employment history. How long have you been at this job? What happened? You've only been at this job a year. Where were you before? Were you in college? So all those questions I'm going to ask. So basically, we want to know what your credit card charges are. Again, maybe you want to wait a little bit, so then when we run your credit is not so high. If you want to pay down debt, this is the time to do it before the pre-approval. Capital. What is the available money? So where is the money coming from? And again, remember that if you have cash money, I cannot use that cash money. You may have a beautiful big mattress with all that cash money in that mattress. I cannot use it. Please, please explain where this money is coming from. Like Dafia said, are you getting gift money? Are you getting grant money? So we want to make sure that you have enough for the down payment and you have enough for the closing cost. And that's my job, to make sure that you understand at the end of the day where all this money is going to come. Collateral. That's the value of the property. Remember that we said the appraisal, so the appraiser is going to go out and he wants to make sure that what you're paying for that property is what the market value is in that neighborhood. So he's going to look for comparables in that neighborhood that are similar to your property. If you're buying in a co-op or condominium, they want to look for the same comparables in that building. They want to try and stay in that building, because remember, every building is different. Your building could have HOA of $1,000, but the building across the street could be $1,500. So again, the appraiser wants to make sure that he's comparing to the same market value. And the last but not least is your credit score. Again, Delphia said very clearly that SONYMA is not credit score driven, but the mortgage insurance company is credit score driven. So the mortgage insurance has 2 numbers that they look at: how much you're going to put as a down payment and what are your credit scores. If it's 2 people that are going to be in the mortgage, we're going to take the middle score and the lowest of. So if your credit score is 640, but your partner is 700, we're going to use the 640 credit score to calculate the mortgage insurance. So the next slide, please. So these are things that I want you to keep in mind when you're looking. These are part of the things that you want to. So everybody has their own priorities. I had somebody that was wanting to buy a co-op and they wanted a gym. And so, okay, that's your priority. Or somebody wanted to be close to, the train, or you have parking. So important, parking. So again, remember that what are the 5 more important things in looking for a property, and compare it. Have your realtor look for these properties based on your needs. So the next slide, please. So the buying benefits. So it's very, very important with things, how they're going around with rent payments going up, and and every month is going up. Your rent every year is going to go up, your rent. There is tremendous buying benefits. You're going to stay in one location. You want to create friends in the same home ownership, or in the same building, or in the same neighborhood. You want to build equity. Real estate is one of the most safest investments that there is. You're going to have stable monthly payments. Remember, most of the loans out there are fixed rate. So your mortgage payments are always going to be the same. What's going to vary is going to be sometimes your HOA or your real estate taxes and your homeowner insurance. Unfortunately, those things go up, but your mortgage payment will not go up. Have funds for the down payment. So again, explore all the grants that are available. And then we'll talk a little bit about the grants that we can offer you. And there's potential tax advantages. The interest that you pay on that mortgage is tax deductible. Can you afford the maintenance? So again, if you're buying a property, there will be some maintenance. If you're buying a one family, you will have to take care of a lot of things in comparison if you're buying a co-op, where you don't have to worry about those types of repairs. The cost to buy, you're going to have an application, an appraisal up front. You're going to have an inspection if you're looking for an inspection. You're going to have that down payment. Again, if you go to contract, you're going to have to put a down payment. And usually if you can negotiate a low down payment because you're hoping to get grants, but you have to have that money up front. The grants are going to help you only at the closing. So these grants from SONYMA and other grants are provided to you at the closing that you can use towards future down payments, a larger down payment, or closing cost. You're going to have some moving expenses. Check with your accountant because I think that the moving expenses can be tax deductible. You're going to have your mortgage payments. And again, be prepared that some of these fees may go up on a yearly basis. The next slide, please. So this is something that I usually offer at our seminars. These are some handouts that we give to give you, you know, an idea. These are little questions that you want to ask yourself. Sit down with a cup of tea, a glass of wine, whatever it is that makes you happy. But, you know, these are questions that you want to see exactly. Do I know what I want to buy? Do I have the income? How's my credit? You know, those are the things that you want to ask, you know, where the money is coming. Will I get any funds, you know, from gifts? Because remember, any monies that come to you has to be what we call paper trail. We need the paper trace for where that money came from. Okay, so any large deposits needs to be paper trace. The next slide, please. This is very, very important. Do keep an ongoing paper trail. Once you've started the application, we're going to ask for additional pay stubs, additional bank statements, provide monies, the money deposit. So again, if you're going to wire this money or you're going to write a check, we're going to need to see exactly that copy of that check. Maintain your employment. Please don't change jobs in the middle of an application. I can't tell you how many times they tell, oh no, I decided to change my job. I thought it was a better job for me. Please don't do that. And if you're going to be doing that, please communicate with your lender because we need to know that. Create a savings plan. Understand, you know, how the credit pools, and we'll talk about credit that. Ask questions and communicate. Don't close any. It's so, so important. Don't close or open any bank accounts while you're doing the application process. Because if you decide to go to PC Richards and buy the washer and the dryer and everything else, now you're going to have an additional expense. You're going to have another credit pool, and you're going to have, you know, a new debt. So again, you want to make sure that don't open or close any accounts while you're in the mortgage application, because we're going to pull your credit up front and we're going to pull it prior to closing. Don't buy a car, don't lease a new car while you're doing this mortgage payment, this mortgage process. Make large deposits. Don't make large deposits because we need to know where those deposits are coming. Don't change jobs. Don't make major purchases. Don't open a new line of credit. You know, those are very important things, you know, that you need to communicate with your lender because any of these things could jeopardize your mortgage application. So the next slide, please.
This is great. This is things that people don't think about. Yeah. And it's amazing. That's what thing I love what you do is it's so much more than just getting a mortgage. It's really about making this plan and hand-holding throughout it.
Yeah, I always say I'm going to be your best friend for the rest of the application. I'll be your best friend until you close, and then I'll drive you to PC Richards to buy your washer and dryer. But don't do it while the mortgage application is.
Hey, such important.
So I just wanted to go over a couple of things. Yes, sorry, Elizabeth.
No, I said it's small things that you don't realize can have huge impacts.
Yeah, yeah, oh yeah. It could affect your credit scores big time. And, you know, now your mortgage insurance is going to go up because you decided to lease a new car, you know. So these are little things that, you know, that are different from a conventional loan. These grants require the documentation, 3 years of your most recent tax returns. And the reason for this is we want to make sure that you haven't owned any real estate in the past 3 years. So this gives us the information that shows you, okay, you haven't owned a property in the last 3 years. That makes you a first-time home buyer all over again. We need all your tax returns, your business, if you have a business, We need a written explanation of your last two. If you changed jobs in the last 2 years, I'm going to need a written because I have to verify that employment. I want to verify that your job is the one that you have now, and the previous job is no longer your job. So that is very, very important that we have that information. We need your 2 months bank statements. I need all pages. Don't give me the first page. I need all your pages. Copies of your driver's license. If a divorce and separation agreement, if you're getting child support or alimony payment, we need to have that information. An explanation of any derogatories that show up. Every derogatory or judgment on your credit report, I need an explanation, and we'll go over that together, and you're not alone on this. Any large deposits, again, remember, have to be paper trailed. And Venmo, all those things, I need an explanation, sorry. So again, these are the things that I do. I hold your hand and I said, please explain this. Let's do this together, So the next slide, please. And credit, yes, this is important, So let's talk about the next slide, please. So I'm going to go to the next slide because I know I'm running out of time. So the next slide, I just wanted to explain how important the payment history is. So 35% of your payment history is going to be what you have done in the last 2 years. If you've had late payments in the last 2 years, that is going to affect your credit scores. Amount that you owe. If you maxed out on your credit, that's going to affect your credit score by 30%. If you're opening a new account, it's going to affect you by 10%. The lengths of credit. Always keep the credit card that you have the oldest open and active. What does open and active mean? That you're using your credit. Even if you buy a cup of coffee, use it and pay it back. But we want to see that you have the discipline to repay debt. And that is so, so important for us. Credit mix, we want to make sure that you have student loans, that you have credit cards, that you have a car lease or car payment, that you have the discipline to pay all this debt. That it's, that's so important. It's not only your credit score, but it's your credit history that counts. So the next slide, please. So these are the two things that I wanted to remind you. The hard pull is when we start the application, we're going to do a hard pull. It's going to show up on your credit report. It's going to stay in your credit report for 2 years. The soft pull is prior to closing. We're going to do a soft pull. If we see something that stands out, we're going to have to question that. Did you get a new car? Did you get new debt? All those things are going to come up on a soft pull, and we may have to rerun your credit during the process. So again, hard pull is when you're applying for anything new, and soft pull is like a credit card company that wants to increase your limit. That's what they're going to do. They want to see behind the scenes that you are not a bad credit risk. So the next slide, please. So these are the things that you want to do prior to the pre-approval. You want to make sure that you're paying your bills on time, that you have a good credit history, that all these accounts are yours, that you didn't inherit accounts from any relatives. So we want to make sure that that your credit, somebody's gone over those credit report with you to see if there is any errors. We're going to go to the next slide, please. So SONYMA is very good at taking alternative credit. So sometimes you need alternative credit. And these are the things that typically don't show up on your credit report. Rent is really, really, really important for SONYMA. If you have been paying your rent on time, we want to see that. And again, rent is if you've been paying a rent in a building, not in a private home. Unfortunately, that doesn't count. But again, rent for 12 months history, really, really important. Childcare, cell phone bills, electric bills. You can show all that as alternative credit. A lot of people now are opting to get your utilities on your credit, so self-reporting your utilities. So if you want to do that, but again, these are alternative credit. If you don't have much credit, we can use these as a backup. Next slide. And just quickly, you want to make sure that if you need to repay your credit, there's a lot of scams out there. Make sure that you're dealing with the right people, because there is, I teach identity theft, and I can't tell you how many times we see people that fall in the hands of, bad credit report companies that do more damage than help. So we're going to go into the next slide because we are running out of time. But anyway, we're on 7:15, so we're good. So we want to talk a little bit about the grants that are available. Besides the amazing Sunny May, that is an amazing grant, and please take advantage. It's free money. We want to make sure that you take advantage of these grants. You stay in the property for 10 years. After 10 years, it's forgiven. What more do you want? It's such a great advantage. So let's go on to the next slide. So Fannie Mae has great programs. They don't provide grants, but they do provide, interest rate with people that are just putting 3% down. Most of the first-time home buyers that I've done put 3% and 5% down, and they've worked really well. We've been able to give them the Sunny Mae plus additional grants. So it's really, really important that you take advantage of these grants. I want to talk about the next slide, which is in conjunction with Sunny Mae, the Homebuyer Dream Program. The Homebuyer Dream Program is a great program that you can layer these grants with Sunny Mae. So you can use the Homebuyer Dream Program. The only thing that you have to remember that Sunny Mae program is all year round. The Homebuyer Dream Program is only good from January to the end of August. At the end of August, if you don't have your application in, you're going to have to wait for the next year. This is $9,500 that you can use towards your down payment and closing cost. Again, this is money that is going to be given to you at the closing, not upfront. So you're going to need that 3%. If you have to put 3% on contract, you need that money upfront. So be prepared for that. The next slide, because I want to leave a little bit of time. So just if you can move on to the next slide. And the Homebuyer Dream Program, this has income ratios again, and also there is location ratios. And again, we want to make sure that who's going to be buying, who's going to be living in the property, because there is two types of calculations based on the household size and the household income. If you can go on to the next slide, please, because I want to leave. The next slide. And they provide a $9,500, and there's two programs. There's the HDP, Homebuyer Dream Program, and HDP Plus. That's new this year. So this is great. Take advantage of that. And the next slide will show you exactly the difference. So they both give you $9,500. They both to be used to down payment and closing cost. And the difference is that the income limits from one to the other. So one has a retention period. That means that we want you to keep this for 5 years. After 5 years is forgiven. And the HDP Plus does not have any retention period. So you get that money at closing, and you basically you're free to go. You can combine this HDP, the Homebuyer Dream Program, with the Sunny Mae program, and you can combine it also with Fannie Mae programs. You can't do the Fannie Mae, you can't do Fannie Mae with Sunny Mae because Sunny Mae has their own program. So again, remember that the lender will explain to you how that program works. And the last slide is we do have an immigrant and LMI incentive that can be used with Fannie Mae. If you qualify, again, as a first-time home buyer, and depending on the area that you're buying, we give you $1,000 towards your down payment and closing cost, and we reduce the rate by 0.25%. So this is a program that you can combine together with Fannie Mae and the Homebuyer Dream Program. So take 2 aspirins and call me in the morning because I've given you a major headache.
Wow, that is extraordinary information. And obviously, a lot of great information. People can follow up with you afterwards to get more information. I'm actually going to share both of your contact information in the chat, so everyone will have it. And I am going to be sending out an email with their contact information, and they will be reaching out to you and providing these slides as well. So don't feel that you haven't seen everything, but I would love to get to some of the questions that we have here, if that's okay with you.
Sure.
Okay,
I went ahead and answered many of the questions on the Q&A, just in the interest of time, but please, there's a few that.
Well, there's a bunch here in the chat. Maybe I'll hit then. So they said, what about, let's see, how much down payment do you have to have on your own before you can apply for CID? For example, FHA requires 3.5%.
Okay, so just like with all of our programs, we require, again, if it's a single family, two family, or condo, that at least 1% be your own funds. So really, we require 3% down, but if you're purchasing single family, two family, or condo, 1% of that needs to be your own. And if you're purchasing a co-op, 3 family, or 4 family, then our requirement is that you have 3% of your own funds into the transaction.
Okay, thank you. Michelle wanted to know, I co-own an inherited home. Do I qualify?
So we have something called Can You Pass the First Time Homebuyer Test? And so if it's not your primary residence, right, and you haven't lived there in the last 3 years, then you can be considered a first-time homebuyer. But if it is your primary home, then unfortunately you cannot qualify for SONYMA program.
Danielle wants to know, what about retirees? Can they apply?
Yes, of course. There are many programs. Yeah, mortgage programs, and Veronica can tell you, we cannot discriminate based on age. You could be 80 years old and apply for a 30-year mortgage. That's fine. So, your pension, your Social Security, all of that is income, and that is taken into consideration when qualifying you and seeing what your affordability is.
Great. What about a question about consolidating credit cards? Will that hurt my credit?
Well, that's why you want to do that before the pre-approval. If you're consolidating credit cards, you're going to be maybe closing some accounts that may affect your credit scores. So you want to make sure that, exactly speak to the lender. What is your plan? How many credit cards you're consolidating? Is that involved that you're going to open a new account and close some accounts? Again, if your credit score is borderline and you need those credit scores to go up, any movement is going to affect your credit scores. So, maybe you want to do that. And again, if you close an account today, let's say that you pay it off and you close it out today, it's not going to show up on your credit report for maybe 30 to 60 days. There's a huge lag in between your activity today until it shows up on your credit report. So it is not instantaneous.
Great. Thank you so much for that. Brian wanted to know, what happened to applying for the grants happen before your home search? What is the order of events? Like, let's say someone wants to buy a home, they're a first-time home buyer. What do you recommend as the first step?
So the first step is that you want to talk to a lender that offers these grants. Again, remember, not every lender offers these grants. And then you want to make sure that you qualify for these grants based on your current situation. Again, we're going to look at your current income. We don't look at 2-year average. We look at your current income. And we want to make sure that the household size, how many people are going to be living in the property, and the household income qualifies for these grants. Again, each grant has their own guideline. That's why you want to talk to somebody that knows these guidelines. Does your income ratio qualify? And again, how's your income? Is it changing? Is it going to change? Did you get overtime this year, but you didn't get it last year? I may not be able to use it. So again, if it's 2 people plus a child, it's a household size of 3 people. So the income changes. The guidelines change because now you qualify for more because it's a household of 3 people.
Thank you for that. This person said, I have a special needs adult and she gets services from the state that pays for her rent. We want a house. And would her monthly payment from the state be counted as income when applying for a loan? So does government assistance count as income?
Delphia, do you want to?
Yeah, so it really depends, right? That's an individual situation that we would need to look at. But if you have it could be considered border income. It could be which helps to qualify. Yes, we do use that. Is it part of the household income? Is it something that's going to continue for the next 3 years? Those are all the things that we take into consideration when looking to be able to see whether or not it would qualify. But again, those particulars you would need to present to a lender to be able to get, to be able to really look more into, all of the details.
Yeah, so all of these really specific questions, these are the reasons why you'd reach out to Veronica and be able to ask her specifically based on your specific pieces of information, what the answer would be. So reaching out to Veronica and asking some of these specific questions is great. I know that you addressed this, but I think someone just wants some clarification. I'm interested in if applicant has an 800 credit score, but the co-applicant has a 703 score, what score is taken by the lender?
Yeah, remember that we look at the 3 credit scores and we take the middle score and the lowest of. So, you know, keep that in mind because we're going to use that middle score to calculate your mortgage insurance. And again, mortgage insurance is necessary anytime that you're putting less than 20% down. And it has specific findings. So depending on how much, so if you put in 3% down and you have a credit score of 640, your mortgage insurance payments are going to be very high. So maybe it's best for you to improve your credit scores so you won't have such a high mortgage insurance, because you're going to have that mortgage insurance for a few years. And I've seen that sometimes it's $250, $300 if your credit scores are low of monthly mortgage insurance. That's a big amount. And, you know, I would hate to see anybody have to, you know, maybe improve your credit score a little bit so you don't have that huge mortgage insurance for years.
Great advice. So, someone wants to know if they get laid off or let go, can they apply once they get a new role, a new job?
So with SONYMA, we want to see that you are either 6 months to a year on that job when you're returning back to the workplace after an absence, right? Because normally we want to see 2 years of consecutive, consistent employment.
Okay, so not only wait until you get hired, but then give it time for you to be able to put some time into the role. Great.
Correct.
Let's see, there's a question here that I thought was very interesting. I thought many people could. So someone wants to clarify head of household. Does that have anything to do with being a homeowner? So someone's concerned about putting down that they've been a head of household. Will that be a problem in qualifying for a mortgage? So being head of household, does that have anything to do with saying that you're a homeowner? Those are 2 separate things, right?
I mean, for SONYMA purposes, we want to see 3 years tax returns, and what we're looking to see specifically is that there were no mortgage interest or mortgage deductions taken in those 3 years in your tax return. So head of household is just really how you file, not necessarily that you've owned a home. So your tax returns will tell if or not you've had a mortgage or if you've taken any mortgage interest or, you know, taxes and so on.
Thank you. Stephanie wanted to know, if I have a 2-income household, can you apply with just 1 income?
So for SONYMA purposes, we take into consideration, we are going to look to comply with the income limits. We're going to take into consideration the borrower and the borrower's spouse, even if that spouse is not on the mortgage or not on the application, right? Because it is household income. However, and so it's anyone on the application and a spouse whose income we're going to look at, and anyone who's on title. You could have 3 other family members living with you or people living with you. If they are not a spouse, and they're not on the mortgage, and they're not on title, we don't care what their income is. They can make $1 million plus, right? We don't care. As long as but if it's a spouse, we're going to count that income, even if they're not on the application.
Great, thank you so much. So I am sharing both of your contact information again, because really we could spend the entire evening. There are so many great questions and you guys are just endless answers for us. So we are going to stop here, but I wanted to say thank you so very much to Delphia, to Veronica for this incredible information that is so impactful to so many. I hope that you all act on it. I hope that you all call Veronica right away and get your journey started, because everyone's journey is different. And you can see here from tonight, there are so many different options for different people. You just have to make sure, you know, Veronica said this, you have the right team. And right here tonight, you've met 2 invaluable team members that can make this journey to home ownership possible. And the least painful as possible. And that's really, really important. Really working with reputable people that know their stuff and care. And that's what you had here tonight. So thank you so much to both of you. Thank you to all of our attendees for joining us. Again, you will receive the PowerPoints from both of these. You will receive contact information. You will receive the recording of this webinar as well. So you'll be able to share it with your family and friends. We certainly hope you do. We really want to get this information out to as many people as possible. So thank you so much, everyone. Please, everyone, stay healthy, stay well, be well, and I look forward to seeing you.
Good night.
Thank
Bye.
you. Have a good evening. Thank you.